This video is to encourage you to be more proactive about your overall tax situation. Many individuals I speak with, they like to talk about investments as the center of their universe as it relates to their overall financial plan. And while investments are really important, taxes are really important. But for a lot of these individuals, they think about taxes as this event that happens once a year as opposed to year round. And in recent years, there's been a lot of changes in the tax law that could impact either positively or negatively your overall financial plan. While I can't discuss all the changes that have happened over the past couple of years, here are a couple I'd like you to consider. Several years ago, there was a Social Security claiming strategy called file and suspend. It was a way in which couples could increase their Social Security benefits. That has now been eliminated. We no longer have that in our toolkit, if you will. Just a couple of years ago, we had the Tax Cut and Job Act, which, while everyone's situation is a little bit different, eliminated a significant amount of deductions for individuals and therefore may be paying more in taxes on an ongoing basis. In addition to that, and most recently, there's something called the Secure Act that was recently passed. And while again, there's a lot of details, too many for this video, one that I'll touch upon is the elimination of the stretch IRA provision. So generally speaking, when you have a non-spouse IRA beneficiary, that non-spouse beneficiary is able to take distributions out over that individual's lifetime. If you had a life expectancy of 40 years when you inherited that IRA, you can take 1/40th of that distribution out every single year as a required minimum distribution. Well, with the Secure Act, the way the law is currently written, those non-spouse beneficiaries that inherit the IRA will have to take all of those distributions out over a 10-year period of time. So 1/10, if you will, which is going to significantly increase not only the amount of that required minimum distribution that beneficiary is going to take, but it will also significantly increase their overall tax situation. So it's yet an elimination of one of the tax benefits that we as taxpayers used to have. As I mentioned, there's a lot of detail in the Secure Act, so be on the lookout for a communication from us that outlines the details that you'll want to familiarize yourself with. So with all the changes that are taking place in the tax law, it also presents a great deal of opportunity. And we strongly recommend that individuals work closely hand in hand with their advisor and their CPA. In fact, at Mariner Wealth Advisors, we have our own in-house CPAs as well as our outside tax professionals working hand in hand. If you'd like to learn more about this, please visit us on our website.